Good afternoon. This is Todd Horwitz coming to you from the floor of the CME Group in Chicago. And as we continue to track down these Treasury bonds, and of course, yesterday we saw a major beatdown as the equities exploded to the upside, especially the NASDAQ. But I think what we're really seeing here today is a little bit of a recovery. And of course, what we're looking for here is to see much higher rates. I think what we're looking for is rates are going to rise, and I think that the Fed is kind of stuck here. And what I mean by stuck is that they're going to be forced to raise if everything is going as planned, and if we're truly seeing the growth, then they're going to have to raise rates anyways. So what's going to happen is, even though they've only planned for 3 rate hikes for next year or for this year, it's going to be a chance that they're going to have to go farther. And what's going to happen is typically has happened to the Federal Reserve over the years, is it's going to get away from them. They're going to have to accelerate the raising of the rates, which is then going to accelerate the selling of the bonds. We've seen a pretty good sell-off in the bonds from when they reached the 158 level, and now we're down in the low 150s. I think what you're going to see is when this finally starts to take toll, you're going to see an acceleration through 150 and down into probably the mid 140s would be one of the next areas we'd be looking for, because the overall picture is very simple. The lower interest rates are starting to have a negative effect on the markets, and you're starting to see this through the pushing down of the dollar and other things that are trying to force these rates lower, and they really don't want to go lower. And when you see markets themselves, when they try to go one way and they no longer can, that usually means that they're going to have a bigger rebound and a bigger bounce. And I think that's what we're going to see here. So we expect some acceleration in selling, especially with, coming up into Friday's jobs number. That could be the trigger that really pushes the sell button. But we saw an attempt yesterday to accelerate the sell side. Today, a little bit of a rally, but again, I expect the rest to start looking for opportunities to sell rallies. Right now would be sellers at 153, and possibly below 152, we can go back below there. That's the way that it looks. That's the way I see it. This is Todd Horwitz, coming to you from the floor of the CME Group in Chicago.